Welcome back, guys. Well, in this video we're going to talk about how I use the structures and the time frames, how I tie it all together to create a strategy and trade basically. Okay, and this is the part of the video that everybody has been waiting to see. So we're not going to beat around the bush much. We're just going to go straight into the what we have for today. Okay, so let's go. First, let me go to a clear screen where I do not have any markups. Very good. Remove all drawings. Okay. Now, in the last video, we just talked about structure, and we cited examples from the 4 hour, the daily, the weekly, and the weekly time frame. Okay. Now, in this video, I'm going to show you guys how I personally utilize this structure, trends, and whatnot to um, take advantage of the market. Okay, I'm a swing trader. In the future, I'll probably do a video on the different types of traders or different kinds of traders. We have the swing traders, the day traders, intraday traders, and the scalpers. Okay, I am a swing trader. It means I tend to hold trades for a couple of days, all the way to a couple of weeks. I've been known to hold trades for over a week. That is swing trading. So how I approach the market, I come on the higher time frame. I adopt what they call a top-down analysis. Now, let that word not, let it not deter you from learning what you need to learn. It's just a big word. This is simply your ability to come on a higher time frame, look at the market from the bird's eye view, break the market down, break down the structures, break down, try to understand or identify everything that the market is doing on the higher time frame, and scale down to the lower time frame to take your positions. Okay, scroll down to a lower time frame to take your positions, to take your entries, to make your decisions. So the way I do it, many people have different approaches to this. Okay, but the way I do it is I move up to the weekly time frame. Now, what do I do on the weekly time frame? I come on the weekly time frame to identify what the market is doing with the bird eye view, to know where the market is. If the market is in an uptrend, to know where the market is, where the market is going, and how to react. We react to the market and we do not predict it. We could have a bias, but if the market comes and it shows us that it's not interested in in the direction that we are expecting the market to go, we forget about it and we react to the new information that the market is providing to us. So I come on the weekly time frame. If the market is in an uptrend, identify, oh, the market is in an uptrend. Where is it at the point of retest, or is it at a push point? The market just start pushing higher. How can I take advantage of whatever point the market is in? So if the market is in a downtrend, same thing. What is the market doing on this time frame? Is the market in a push point? Is it at a retest point? What is the market doing? So we can be able to make an informed decision when we scale down to the lower time frames. Okay, so let's go and look at the charts. Now, let me scroll back so it doesn't look like all the this 20 Let me use bar replay tool. I hope be able to allow us see this point on our for our this 2021. So let me reset it now. On the weekly time frame, if we look closely, we can find that this market was trending up from this high, came lower. See this two candle pullback, lower high, lower low. You made a high, still in a downtrend, higher low, but immediately broke above this high, higher high, came broke under this low again, lower low. He made lower high, higher low, higher high. So it has broken into uptrending structure, higher low, higher high, higher low, higher high. So in my head already, I'm already looking at this market as being in an uptrend. This is the previous high that the market took out. And the market took out to continue in trend. So on the weekly time frame, this market is bullish. Go over to the daily time frame. Do the same thing. Try to see where you are in structure and in trend on the daily time frame. Low, high, higher low, higher high, higher low, higher high. Why? This is the candle that has the two candle pullback after breaking out this high. Higher low, higher high, higher low, higher high. So this market is in an uptrend here on the daily time frame. So I'm already looking at when you guys see me come on the weekly forex outlook. I just go and tell you guys, oh, this I'm expecting the market to keep pushing up. The market is in an uptrend. This is all I'm doing. This is all I'm trying to process as I'm looking at. But I've been doing this for a while, so I could come here and within 2-3 minutes I have identified the trend because this is already second nature to me, especially when I come on the daily time frame. Okay, I'm giving you guys the breakdown how I go through everything in process. I'll also tell you guys the two most important time frames to look at. I'm giving you guys the full package here in this one video. Okay, I'll explain to you guys how I group these pairs that are in trend. I have, if it weekly, daily, if the weekly is in an uptrend, daily is in an uptrend, and 4 hours is in an uptrend or coming back to a retest level, that is an A plus setup for me. But say the weekly is in a downtrend and the daily and the 4 hour are in uptrend, that is a B setup for me. We'll talk more about this as we move forward. So like I said, this is showing me what that is in an uptrend. High, equal lows, low to candle, higher high, higher low, higher high, higher low. So I'll probably mark this point out. This is the low I'm expecting this market not to take out. Market pushed up. Has it made a higher low? No. Higher low. This is the low I'm expecting this market not to take out now. Market came to this region. At this region, in this whole area here, I'm going to be looking for buys. I'm going to be looking for buys in this whole area here. Why? Market is in an uptrend. It broke out, came back, retested, and did a fake out and close. What is this? A bullish engulfing. I thought about candlestick patterns and chart patterns. This could be your entry. Stop loss at the lows. First level target at the previous highs. We got 2 to 1. Right all the way to the upside. just like that, TP. But we are not here to talk about this yet. Okay, so this is a good point to look for entries on the 4 hour. So like I was saying, I came to the weekly to look what was the trend. The trend was bullish. I saw that the market was bullish. It was in an uptrend. It was pushing. I came to the daily to identify the structure as well. Daily trend was bullish as well. It broke up, retested. It was in an uptrend. For my entries, I come down to the 4 hour. On the 4 hour time frame, I'll be able to fine tune my entries to get really good entries. Now, what do I use as my entry model on the lower time frame, on the 4 hour time frame? I use double tops and double bottoms. Everything now, if you pay close attention, everything I've taught, in this series is coming together. I taught candlestick patterns, I taught chart patterns, I taught trend, I taught structure, I taught all these things. So if you follow the videos all the way from the beginning up to this point, everything I've been teaching from the beginning will be tied all together in this video. Now, on the 4 hour time frame, which is my entry time frame, I am not looking at structure, because if you watch here, this is a low to high, equal low, higher low, higher high, higher low, higher high. It came and it broke and closed here. If you're looking at structure at this point, you'll be looking for sells. But the higher time frame, which is the weekly and the daily time frame, I've already told me that I'm expecting the market to buy. So I'll be waiting in this whole region for entry confirmations to take this market to the upside. Now, if you're not able to enter here, I will not enter here. Why? Look at the time at which this market is giving us the entries. 2 a.m. I did not enter during the Asian session. I thought about sessions. I also thought about sessions. So I'll definitely have missed this trade. I would not enter. But right here, let's see. This is 6 a.m. What is this? One bottom, two bottom, hammer candle. I told you guys when we spoke about entries, I enter based off hammer candles or engulfing. I'll definitely have gotten in after this hammer candle here and this double bottom. Now I'll show you something. After this part, we'll talk about trade management, money management, and all that good stuff. And you know my rules. If the market has given me up to 3%, there's no way I can throw away the trade. There's no way I can take a loss. There's no way I can. Once I have up to 1 to 3, 1 to 4, I'm either closing the trade or I'm taking majority of my profits at that region and moving my stops to break even. So you can see that this was a 1 to 5. Probably have booked a lot of profits and the market will come and take us out at break even. But even still, the market is still in our region. Is there an entry? 6 p.m. I'm not going to take this trade. So let's go over this again. I started from the weekly time frame. This is the process I go through every single time before I take a trade. Before I press buy or sell on my computer, I always go through this process. And what is that? I come and I look, what is the market doing on the weekly? Where are we on the weekly time frame? Are we bullish? Are we bearish? If we are bearish on the weekly time frame, but the daily and the 4-hour time frames are bullish, that is a B setup. A B setup is good enough for me. I'll still take the trade. But if we have an A setup, A plus setup, meaning the weekly is bullish, the daily is bullish, the 4-hour, there is no doubt in my mind. If we have that kind of setup, it will even give me, the courage to hold the trade because I target um, previous highs or previous lows. But if you have a weekly confirmation or a weekly showing me that is in this same trend, to give me the confidence to hold the trade, for higher targets. Okay, so I'll go through the process again. I come to the weekly time frame. I identify the trend: low, high, higher low, higher high, higher low, higher high, higher low, higher high. The market is definitely in an uptrend. I come down to the daily time frame. Same thing: low, high, higher low, higher 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 high, higher low. So where the market came back to retest the previous point that the market broke. That's where it came to retest. At this region here, this is where I'll be scrolling down to the 4-hour time frame to look for entries. Either I look for chart patterns or candlestick patterns. This is where, once the market is back at this region, I'll be scrolling down to look for my entry confirmations to take advantage of this trade. That is the long and short of how I take my trades. Okay, now let me cite more examples. Let me play forward. Now I use the top-down analysis for my market breakdown. I go from the higher time frame, come down to the lower time frames, and see the bigger picture and take decisions based off that bigger picture on the lower time frames. Now my the entry model I use is the break and retest. I'm going to do a different video where I'm talking about entries, candlestick patterns, chart patterns, how I enter the market. But is a break and retest. And what do I mean by break and retest? When the market is in trend, and if you notice everything I've been talking about here, I told you we have trending markets and a consolidating or a ranging market. I only pay attention to the trending markets. I only ever take markets that are in trend. You will never see me try to look for an opportunity in a market that is just consolidating or ranging up, down, up, down, up, down, up, down, up, down. That this will never be me, not in a million years. Why? A market that is ranging, is in consolidation, there is no structure to back it up. The market can move up, come down the first time, move up. You'll be expecting the market to come down, it could pull back a little bit, come flash up, flash down, pull back up, come down. This is still a ranging or a consolidating market. No structure is backing this market up. The market can do something like this. This is still a ranging market. Why do I want to give myself this heartache? Can never be me. So if you look at me and the when I'm looking for opportunities in the market, I'm always looking for opportunities where the market has, is pushing in a particular trend. Either the market is pushing up or the market is pushing down. I'll just be looking to join the trend and ride the wave with the market, to wherever the market is trying to go. But you never see me trying to see a ranging market and trying to guess and say, oh, the market is in a resistance, so let me try. Sometimes it works. There are traders that is their bread and butter, that is what they look for. I personally, I thrive when the market is in trend, so that is what I stick to. So like I said, we'll speak about entry models in subsequent videos, but let me just talk a little bit about break and retest. Okay, so like I said, after we have seeing the trend on a higher time frame on the weekly, come on the daily to uh, confirm the same trend. I wait for breaks and retests. Now this is a resistance. So let me explain what a break and retest is. The market is never moving in a linear. It's never moving like this. The market is always moving in waves. Push up, push down, impulse, correction, impulse, retracement, impulse, retracement, impulse, retracement. This is how the market moves. The market does not move in a linear form. Okay, so 9 times out of 10, when the market breaks above a high, it comes back and corrects either to the previous high that it just broke above, or back to the lows. Okay, and I told you guys structurally, if the market is in an uptrend, I do not expect these lows to be taken out. So this market can pull back to this previous high, is still in trend. It can pull back to this previous low, is still in trend, as long as it does not close underneath this low. If it comes and it closes underneath this low, then the structure is in trouble. So I'll be looking to stay away from the market. But if it just comes here and it wicks in and plays around this area and continues pushing up, it's still in trend. So I can always look for ways to take advantage of the market. So I spoke about break and retest. When the market breaks a high, 9 times out of 10, it comes back to retest it. Either retest the high that it just broke, or the low of the trend. So these are the areas I'm waiting for the market to retest for me to take advantage of. The market, watch here again, the market took out this high, came back and retested it. Now all these are just examples. Do not expect the market to give you as clean as this, oh, textbook ways. The market can come make a deep pullback like this. The concept is the same. What you're looking for is the same. All you need to understand what you are expecting out of the market. You need to be patient to wait for your setups. Okay. So right here, let me give you guys live examples. That's what happened here. From higher high, higher low, higher high, it came back to retest this low. So on the lower time frame, we're going to be looking for entries on the lower time frame, 4 hour, 1 hour, to ride the market all the way to the upside. It did the same thing over here. It broke above this region here. It has come back into this region. So let me just go over to the 4 hour time frame to show you guys. Let's see. This is a previous data. I don't know what is going to happen. So I'm just going to play forward to see if you can find an entry. This left head, right shoulder. What time is this? 10 a.m. Double bottom. I'll take this one. Now, the essence of me taking this trade is not to win or to lose. Show you guys, oh, I won the trade or I lost the trade. It's to show you guys what I am looking for. This is a probability play. 3.5. This is okay. My target will be here. Based off the weekly, you can go for higher targets because the weekly is also in an uptrend. The daily is in an uptrend. But for this example, I'm just going to 1 to 3 is okay for me. So step out. Let's see how far the market pushed. Stop out. Okay. What's wrong with this trade? Absolutely nothing. Market is in is in an area of interest. What I mean by an area of interest is in an area where we are expecting the market to push from. The market came and gave us an entry, one bottom, push up, second bottom, engulfing. Told you guys we'll talk about entry soon, but what I'm trying to identify here is the areas and what we are looking for. So, um, market push down, push back down. Let's go over to daily to see what's going on. The higher time frame always paints a better picture. Market came, spiked down, putting an engulfing here, came back to the previous low. At this region here, higher low, higher high, higher low, higher high, higher low, higher high. This would be a dicey one. At this region here, I'll be looking to see if there's a chart pattern for me to left head, right shoulder, 6 a.m. Uh, you could take this one here because remember we're expecting the market to come here to give us a pattern or here to give us a pattern and give us a pattern here. So you could take an entry here based off this pattern 1 to 2, 1 to 3, targets to the top, target hits. Let's see what happens. Daily, weekly. On the weekly time frame, structurally, can you see that the market never took out these lows? It just came back here, retested this whole region, and pushed all the way to the upside. So the higher time frames are always going to be very important. Higher time frames are always going to be very important in trading. The market came, and if you didn't close, the market will come back and take you out at break even after getting to the 1 to 3. See why the 1 to 3 is very important to me, and that entry here probably. So like I said, top down analysis is what does it for me. Top down analysis. I come all the way to the weekly time frame, identify the trend, identify where the market is within the trend. I come down to the daily time frame. Daily time frame is where I mark out my zones, where I mark out my retest zones. Okay, the market broke out of this region. I'm expecting the market to come back to this region to retest. When the market comes to retest, this is where I look for entries. This is where I look for my entry confirmations to go long. Here we got an entry confirmation of a double bottom. But as you can see, the market pushed up. It didn't work out. It came. It stopped us out. We got another entry here at the retest of the lows. It gave us a head and shoulder pattern. I spoke about patterns in one of our videos. You can go back and you can watch it. It gave us that entry confirmation here. We saw it. We took it. Targeting at 3%. The markets moved all the way to our take profits and it came back all the way down. Okay, so the top down analysis is how I trade. In the next video, we're going to be going more in depth into our entry and exit strategy. Then after that, we'll go into the risk management involved, money management, then psychology, and there's so much we are going to be going into in this series. So when we start going into trade breakdowns and uh, pre pre-trade setups, we are going to be I'm not going to be scared of, oh, this, the audience doesn't have this down packed, or they don't have this, they don't understand this yet. That's why I'm trying to cover all these things in this series before, you know, moving over to the advanced stuff. So I'll catch you guys in the next part where we talk about entries and exits. So I'll see you guys there.